Top 20 life insurance questions in the U.S. Number 8, life insurance for seniors over 50? Question mark. Best life insurance for companies over seniors over 50, 60, and 70. No medical exam options. Okay, for this, pretty straightforward, right? My favorite company for final expense, provided the client is fairly healthy, is Mutual of Omaha, hands down. They've got great customer service. They're top rated as far as customer satisfaction, not only the people buying the policy, but the people who receive the payouts, your family, the beneficiaries. They are top rated. Are they the least expensive? No. They're probably somewhere in the middle, maybe the lower end of the middle. They're not super expensive, but they're not the cheapest either. But their reputation, their customer service, I mean, you can't go wrong with them. The top companies, if you're over 50 and you're looking for a life insurance policy, I would still kind of lean toward, if you're 50, I would probably still lean towards a term policy as opposed to a whole life policy. And I can do a little comparison for you. If you have a moment, let's see what we've got here. So I did this. This is a 30 or 50-year-old male in Texas, non-smoker, excellent health condition, $100,000 worth of coverage for 30 years. So this will take him all the way to the age of 80. So this is a $100,000 policy for $35.75 a month. This will last 30 years. And after 30 years, it does cancel. Now, let's take a look at a whole life policy. This is just $50,000. This is half the amount that I just looked at. For Mutual of Omaha, a whole life policy will be $140.58, which is one of the better prices. I think Ethos has got it $138. Ethos isn't a bad company. It's just not one of my absolute favorites. It's not a bad company though. So if you get it, it's probably going to go through TrueStage, which is a fairly reputable company. So let's take a look. The difference between the term and the whole life policy, let's assume that you got the 30-year term for $35.75 a month. So you are going to take that policy and you're going to invest the difference, the $95 a month. So you invest $95 a month for 30 years in a mutual fund, assuming that an 8% return, which is on the lower end. At the end of the 30 years, not only would you have had twice the coverage, you'll also have an ending balance of $133,812.31. So my recommendation is to, if you can qualify for a term policy, to get that and invest the difference. If you can't qualify for a term policy and you absolutely need to get a whole life policy, my recommendation would be to go for Mutual of Omaha, top company. If you have some major health issues where you're not going to be qualified for day one coverage, my recommendation would be to go for a company like AIG or Corebridge. But that's pretty much breaks it down. If you have any questions, you wanna talk, chat, feel free to send me a message to set up a time or give me a call. All right, thanks a lot.